This is Cathie Wood at ARK Invest. Well, it certainly has been an exciting week. I guess you could call it an exciting week. It's given us lots of opportunities.
Welcome back, friends, for one more update from the world of high-growth EV stocks. In case you are new to this channel, please do consider subscribing. Now let us get right into it. In our last video, we underlined that a key number to watch for the coming few days will be the price of crude oil. And as per the latest developments from Sunday, there were some incidents that sent the crude even higher in international markets. If the price of crude oil goes up in the international markets, that will add to the fears of inflation, causing the bond yields to soar further. Luckily, we have started off Monday on a positive note, but it's important to note that Nasdaq is still red, and there is still a long way to go this week. Broader markets, and especially the growth stocks such as Nio, will continue to feel the downward pressure for many more days to come. That said, according to the real pros of the stock market, the current correction is really just a great opportunity. For example, we know that Cathie Wood of ARK Invest has earned a massive name for herself, with the accuracy of her convictions in the recent years. After last week, she gave out an update to the investors about what she actually thought of the current downturn in growth stocks.
I know there's a lot of fear, uncertainty, and doubt evolving in the world out there, but we're doing a lot of original research. We have a 5-year investment time horizon, and we are truly excited about the opportunities that the last few weeks have presented us. As you know, our minimum hurdle rate of return for any stock to enter our strategies is 15% at a compound annual rate over 5 years. That's a doubling over 5 years. Well, you can imagine what has happened over the last few weeks. Market activity alone has taken that projected rate, and again, it's just a projection. We could be wrong. The world could end. I'm sure I have compliance monitoring me very carefully when I say this, so I want to say it correctly. But according to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change, and disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. To give you an example, electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right that we are moving into more of a ride sharing, both human driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially, I would say, among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us.
So, those were some incredible numbers we just heard from Cathie. She expects a growth of 82% CAGR over the next 5 years. That should roughly 15x the electric vehicle market around the world, including in China. We however believe that since China has already been growing much faster than the rest of the world, the Chinese electric vehicle sector may see a growth of 100% plus CAGR over the next 5 years. Coming back to the Nio stock again, we believe the prospects for Nio look really strong, once the current correction phase ends. Today there were updates that Nio has finally obtained the necessary license in Norway, in order to import their cars for the European market. There are also reports that Nio's deal with the Chinese energy behemoth Sinopec should also get confirmed very soon. According to Chinese media, a piece of news from the Nio recently revealed that Nio will cooperate with the traditional energy giant Sinopec, and on April 15th, Nio's first second-generation battery swap station is expected to be officially launched at the Beijing Sinopec gas station. According to the report, if the partnership between Nio and Sinopec goes well, more battery swap stations are expected to appear in Sinopec gas stations in the future. We believe this will mark the beginning of something truly historic for China, as the country begins to say goodbye to fossil fuel-driven internal combustion engine cars, and move almost entirely to new energy vehicles. In more positive developments, the other Chinese electric vehicle manufacturer XPeng announced their fourth quarter results today. And besides reporting a very promising earnings, the management of XPeng provided very bullish demand outlook for the rest of the year in China. Needless to say, the factors for this bullish outlook apply equally to Nio as well. We believe Nio is currently the best placed electric vehicle company in China, and that will remain so for many more years to come. From the latest quarterly reports, we learned that Nio is currently sitting on a cash position of $6.5 billion, which means Nio will also not see any cash burn related risks anytime in the near future. Nio's revenue has been growing very strong quarter on quarter, and after having had their best quarter in history in Q4 of 2020, they are expecting to do even better in the Q1 of 2021. Things are looking only positive for Nio, no matter in which way we try to look at the company. And as you already know, the Chinese government is moving really fast, making the country switch from internal combustion engine cars to electric. We see Nio as being the main company, besides Tesla, which will help the fast-growing Chinese economy make this transition to electric, and we remain extremely bullish on Nio for the medium to long term. As always, thank you for tuning into this update. And if you want to have a broader understanding of why the stock markets are falling these days, please check out the video you now see on your screen.